in terms of the market, I think obviously the key thing here is the continuing shift in market perceptions of the fundamentals, supply and demand. We started this year with this dominant consensus that there's so much spare capacity, prices have to remain low, demand's going to remain horribly weak. There's so much supply coming, it's going to come from everywhere. It's going to be a flood from Guyana, Canada, the US, Brazil. And so this very, very bearish narrative based primarily on that there's a huge amount of spare capacity and that non-OPEC plus supply is increasing very fast. I think if we roll on into July, the spare capacity is clearly much more limited than people thought. I think the rolling back of the November 23 cut of tiers has revealed that spare capacity was never as large as people thought. Demand isn't that weak. The market has remained neatly in backwardation. There's always been a bid at the front end of the curve, certainly not at the really low numbers of 200,000, 300,000 annual growth, which many in Wall Street were pushing at one stage. And likewise, this flood of non-OPEC plus oil, it's just not there. The US is slowing down, flattening out, starting to turn over. You need a lot more than one Guyana really to affect those overall global balances. So I think the playing out of that dynamic is the key thing from here. The market adjusting to the idea that spare capacity is lower, that demand is
this kind
stronger.
of